There will come a time in your life when you must retire after working hard for a lot of years to build a life for yourself and your loved ones. Now that you are of retirement age, you may have new aspirations and objectives. You might want to see the world or spend more time with your loved ones. You might also want to support your child's career or their business. Even though all of these things could be challenging, with retirement planning, you will be able to accomplish your goals while maintaining your financial freedom and self-assurance. In this video, we'll talk about the importance of retirement planning and examine the steps you need to take to get ready for your retirement years. Thank you for visiting our channel. Today, we'll discuss retirement planning and ways you may prepare for your retirement. Before we continue, make sure you like and subscribe to get the most up-to-date information on topics like this. So let's talk about retirement planning. To understand what it entails, planning for retirement means making arrangements for the future so that you can continue to fulfill all of your objectives and aspirations. Watch this video to the end to learn more about deciding how much money you'll need for retirement, how to create goals for your retirement planning, and how to make investments to boost your retirement savings. Now remember, every retirement plan is different. After all, everyone has a different vision for how they wish to live. People can now remain healthy and active well into their retirement years thanks to significant advancements in technology and medicine that have revolutionized the globe. Sadly, a lot of people don't have enough money saved up or invested to comfortably retire in their 60s. Estimates from the Consumer Financial Protection Bureau and the Center for Retirement Research at Boston College indicate that more than half of retirees in the current generation have either already reduced their spending or will soon be forced to do so due to limited finances. The majority of retirees will end up entirely relying on their retirement benefits to fund their living expenses, only to find out the hard way that they don't have enough money. Although retirement benefits are only intended to replace a third of the average worker's pay, more than 1 in 5 married couples and 45% of single retirees rely entirely on them for more than 90% of their retirement incomes. While making retirement plans, there are a few things you should consider. Are you planning a retirement soon? Will you stay at your current job until you reach 65 or beyond? Are you planning an early retirement? How do you intend to pay for your daily expenses? Do you plan to retire? Will you also need to save or invest money? Another factor to consider is the amount of your actual living expenditures. Whether you own or rent property in retirement can have a significant impact on the cost of your living expenses. What amount of money do you need to retire? Regrettably, no one number can be used to describe everyone. Although many people are able to survive without ever developing and putting in place a retirement plan, those who enjoy their retirement the most are those who set up their retirement plans before retirement. By making retirement plans, you can continue to live comfortably and fulfill all your goals and aspirations after your career ends. How much money you'll need after retiring greatly depends on how long you spent working. Working until you are older minimizes the number of retirement years you need to save for and gives your money more time to develop. Calculate how much money you'll need to retire on your own by following these easy steps. Determine the total cost of your annual living expenses after retirement. You can use the assumption that after permanently leaving the workforce, the typical retiree needs about 80% of his or her pre-retirement income to maintain the same standard of living. Include your anticipated retirement benefits as well as any pension income when calculating your expected net yearly living expenses in retirement. An estimate of the retirement benefit income you expect to receive is included in your most recent retirement benefit statement, which you can access on the Retirement Benefits website. Multiplying your estimated net annual living expenses in retirement by 25 will give you the total amount of money you'll need to save for retirement. A second basic guideline is the 4% rule, which states that you should multiply your anticipated retirement costs by 25 to determine the entire amount of retirement savings you'll need. To guarantee that you have enough money to endure for at least 30 years, this rule states that you shouldn't withdraw more than 4% of your retirement savings each year. At the end of each month, different people have different amounts of money they can set aside. To begin saving for retirement, you should try to always save up to 15% of your income. Remember that you don't have to save 15% of your salary right away if it sounds impossible. If your job offers a retirement plan and the company pays matching contributions, you must, at a minimum, contribute enough to your retirement account to qualify for the full company match. If your work doesn't offer a retirement plan, try saving at least 6% of your income. You can then work to increase that sum. Try to progressively increase the contribution rate until you reach your desired contribution rate. Given the variety of retirement plans available, you have a plethora of wonderful options for attaining your retirement planning goals. The 4 categories of retirement plans include pensions, self-employed retirement plans, employer-sponsored retirement plans, and individual retirement accounts. Employers often design these retirement programs, which have the benefit of matching employee contributions. These all-employer-sponsored plans consist of a retirement program like the 401k, where payments are deductible from income taxes. Keep in mind, however, that for taxation purposes, withdrawals from the plan are taxed as ordinary income. A 403b retirement plan, which is comparable to a 401k plan, but is only available to public institutions, nonprofit organizations, and churches. A 457 retirement plan, which is similar to a 401k, but only available to staff members of some highly compensated nonprofit organizations and state and local governments. It is similar to a 401k and is a thrift savings retirement plan, available only to federal employees and members of the uniformed forces. Let's now examine the other plans. These are all different types of employer-sponsored retirement plans. Pension plans are sometimes characterized as defined benefit plans because they offer a fixed, predictable amount of money each month for the rest of your life once you retire. Private enterprises that offer pension plans are not very common, despite the fact that the public sector still does so. Next up are the individual retirement accounts, or IRAs, which are split into 2 categories. While their timing differs, both of them provide tax advantages. The first type is a traditional IRA, a retirement account in which contributions are not tax deductible, but withdrawals are treated as regular income for tax purposes upon retirement. The second type is a Roth IRA, a retirement account in which contributions are not tax deductible. What if you're self-employed? How should you prepare for retirement? Self-employed people have several alternatives to access many of the same tax advantages afforded by employer-sponsored retirement plans, even if retirement planning for the self-employed may entail some administrative labor. Self-employed individuals can access the following retirement accounts. The Simple IRA, also known as Savings Incentive Match Plans for Workers, is a type of retirement plan for businesses with less than 100 employees. The abbreviation SEP IRA stands for Simplified Employee Pension. Employers are expected to make 100% of the financial contributions to the Simplified Employee Pension IRA accounts and to extend the same advantages to all eligible workers. Alternatively, you can use the Solo 401k retirement plan, which is similar to employer-sponsored 401k plans but has a higher annual contribution cap. People who are getting ready for retirement often have the choice of making pre-tax contributions to a retirement plan and paying taxes on withdrawals in retirement, or paying taxes on their contributions to a retirement plan and receiving the money tax-free in retirement. The best option is often a retirement plan that gives you tax advantages in retirement if you believe your future income requirements will put you in a higher tax bracket than your current wage. Roth versions are retirement plans that provide tax advantages in retirement. Although Roth IRAs and Roth 401ks are often used, you should also consider a Roth 403b plan, a Roth 457 plan, or a Roth Solo 401k. Even if you have a 401k or traditional IRA, you might be able to avoid paying state taxes on withdrawals. In some areas, the income from these kinds of retirement programs is tax-free. Preparing your retirement strategy is essential, but shouldn't be stressful for you, especially if you start early. If you need help determining your optimum asset allocation, estimating your retirement age, or setting up your retirement income strategy, you can seek advice from a certified financial planner or another experienced professional. The most important thing is that you thoroughly examine retirement planning and get started as soon as possible. We sincerely hope you liked this video. Retirement can be a really exciting time, but if it isn't well planned for, it can also be very stressful. With the help of the advice we've provided, maybe this process will go more smoothly for you. You will be well on your way to a successful retirement if you keep these suggestions in mind. If you liked the video, please like and subscribe.